Hello and welcome everyone to Silver Asset of the Day for the 29th of October 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So we only have 6 days to go now until the US election, and we have seen volatility ramp up in the last few sessions here. So as expected, the dollar has broken out to the upside. Metals have been under pressure. We've seen silver prices dip back below $23 per ounce, and also gold under some pressure here, currently residing around $1,863 per ounce. Now, as I mentioned on the week ahead commodity report, you want to make sure that you're tracking gold and silver not only against the US dollar, but against multiple currencies. We saw weakness at the beginning of the week already against the euro, against the Australian dollar, which was setting up the tone for the metals. It was very likely that we were going to see the metals under pressure, following on from gold being weaker than other currencies. And as the dollar had broken down on Friday, and so had gold priced in US dollars, it meant that as soon as the dollar broke out to the upside, that would very likely put pressure on both gold and silver. And that's, of course, exactly what happened. Right now, in fact, in our portfolio, our dollar position is the heaviest weighting that we've got. We've got 3 trades on the dollar. We banked partial profits yesterday, took some profits off the table on the dollar. In fact, at the beginning of the week, we came out of a very quick trade on gold, 100 points profit on that. We banked 100 points on copper, and also so far 50 points on the US dollar index. So that's 250 points banked just by being nimble, coming in and out of the markets quickly. And all of our positions right now that we built into the dollar are currently significantly in profit. And this puts us in a good position here as we move into the US election, where we're bound to see more volatility. You've got many traders and investors, they're moving into cash to protect their portfolios. You remember we mentioned this last week. Look out for, in the lead up to the US election, traders will get on the defensive. When they move into cash, that will cause the US dollar to appreciate, and with that, you're going to see very likely a sell-off on commodities. We've seen oil prices break down to $35 per barrel. We've seen palladium prices break back down towards $2,200 per ounce. Platinum prices have broken down to $854 an ounce. Silver prices have broken below $23 an ounce, and of course, gold has broken down to around $1,860. So this is all played out as anticipated, as we've been discussing with you. So now with 6 days until the US election, again, the main scenarios that you want to look out for is the potential for a very uncertain result. So not only are traders moving into cash to protect from volatility, they're also doing so in the event that you get a contested result, where Donald Trump has already stated that he will take it to the Supreme Court if he does not win, stating, of course, that the mail-in votes have been rigged and that overall it wasn't a fair election. And with that, this is where it's going to create further uncertainty, and this could again drive more capital into the dollar. And gold is being perceived as still a bit of a safe haven here. With the ratios that we're looking at, the gold-silver ratio is broken out to the upside today, which shows us that gold is outperforming silver. It's back at 81-1. So gold is getting a bit of support off the back of all these increased lockdowns that we've got currently. So we've seen another lockdown in France now, which is going to be implemented on Friday. Going into next week, we have a lockdown now being implemented in Germany. We have additional curfews which have been implemented in Italy. And overall, this narrative of increased lockdowns is providing a bit of support for gold as a safe haven. But because the dollar is getting the majority of the benefit of this risk-off environment, this is where the dollar is appreciating more significantly and causing commodities, of course, to sell off, which you can, of course, capitalize on. So there's a pre-election trade that we are in at the moment. We continue to build positions for going into next week. There will be, of course, the knee-jerk reaction off the back of the election night, where we want to see how the markets do respond to what the end result will be from that. And then you're going to get, once the dust has settled, further big trade opportunities. And then we're leading into a very lucrative time of year over November and December, and then into Q1 of 2021, which is an exceptional time to be trading commodities. If you're aware of the cycles, the seasonality, the intermarket correlations at that time of year is extremely lucrative. You definitely don't want to miss out on these big opportunities. So again, you've got the pre-election trade, you've got the trade on the actual night of the election, then you've got the trades that result after that as well. Not only do you have the election next week, the day after you have the FOMC statement, and on Friday you've got non-farm payrolls. There's going to be lots of opportunities to be nimble in and out of the markets, banking profits regularly, and that's what you want to take advantage of. It's just as important to know when to close and bank the position as to get into the trade. And right now, going back to silver, is currently trading around $23 an ounce. If we do see the dollar continue to appreciate between now and the US election next week, I would be very interested to see if silver can retest the swing lows back at 21.50. That would be a major liquidity zone as well. Of course, you've still got that Goldman Sachs target of $30 per ounce, which from the current prices right now is $7 away. You really want to make sure that you're timing your entries correctly. You need to know the exact cycle and the exact points to enter, where to, of course, position your stop on such a trade and the levels to target, and when you need to be banking partial profits in that sort of a position. But we're at a very interesting time of year now, where if you had been waiting on the sidelines, particularly on the metals, if you missed some massive moves over the summer, you're going to be gifted further opportunities to take advantage of your volatility, potentially some big corrections here, which then could lead into some massive opportunities later on this year as well, and then into Q1 of 2021. So again, if you would like to learn a research-driven approach to the market, where you're going to be utilizing data, market intelligence, our research, you're going to be looking at the intermarket correlations, you will be utilizing cycles, seasonality, not only that, but also paying a lot of attention to what the hedge funds, the money managers are doing, where they're banking profits, where they're getting into positions, the key liquidity zones that you need to be targeting, then being aware of the most optimal zones to execute trades and bank profits as well. So with that, if you would like to join a community of successful traders, learn a research-driven approach to the market, and join the live trading room mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.